may have seen as a consequence of the silver squeeze a 10 or 12% increase in demand for silver in the United States, relative to supply on float. I think we're going to see demand triple. That's 300%, not 10%. And when you have a 300% increase in demand with no concomitant increase in supply, because you can't increase supply that much, the price action can be very, very dramatic.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Early in January of 2022, we're on Wednesday, January 5th. And while the price of silver remains magnetized towards that 23 strike, there are things happening beneath the surface that would paint a different picture than one might find just watching the charts. And along those lines, this was actually about a week ago, but I've been meaning to share this because Rick Rule actually recently warned not just of another silver squeeze, but the real silver squeeze, and also even said he sees it as a matter of when rather than if. Of course, I would certainly agree with that. So let's play this clip here of Rick Rule. Again, keep in mind, while he is now retired, he was involved with the Sprott Silver Trust, so you think the largest buyer out there. And so given that context, let's take a listen.
Years ago, nobody cared, and now everybody's fascinated. And what I want to say to speculators is, yes, there's more room to go in uranium, but the market's affinity for silver now is where the market's affinity was for uranium 2.5 years ago. To be a successful speculator, you got to hit them where they ain't. You got to buy assets that are unloved. You can't get an asset that's loved cheap. And so in terms of sentiment.
Speaking of unloved assets, I mean, if silver wins any prizes, I mean, you've got to have that one, right?
Silver is where uranium was.
Right. And, silver has, I find, a really dedicated base, but also a group of people who have faced so much pain. And we had that hope at the beginning of the year with the silver squeeze that's kind of dwindled off. For you, would you say that's kind of still going on? It's just the beginning and we'll see it rise again?
I think we will see the real silver squeeze in front of us. The silver squeeze that we saw was very interesting. And I got to say, I was taken by surprise by the amount of physical silver that was bought by newcomers to the silver market. It was incredible to see the amount of silver that they bought. But that isn't what the real silver squeeze is about. The real silver squeeze is simply about the market share of precious metals returning to their historic means. It's about university pension funds, state pension funds, and insurance companies going from having no precious metals in their asset hoards to having 2 or 3% in precious metals. When that happens, Charlotte, and I really think it's when, not if, when demand for precious metals merely returns to the prior means, I think then you see demand for precious metals triple. We may have seen as a consequence of the silver squeeze a 10 or 12% increase in demand for silver in the United States, relative to supply on float. I think we're going to see demand triple. That's 300%, not 10%. And when you have a 300% increase in demand with no concomitant increase in supply, because you can't increase supply that much, the price action can be very, very dramatic. So I think that the silver squeeze that we saw was an interesting phenomenon. It tells us that the way the world invests and speculates is changing. That information doesn't need to come from Chase Bank or the Wall Street Journal. It can come from Charlotte McLeod. There's distributed information and distributed response. That was the message of the silver squeeze. But in terms of its impact on the silver market, there wasn't much. What will make a difference in the impact on the silver market is when we get away from the Reddit crowd and we go to, Ontario municipal employees You know,
Now, on a quick note, I do agree that would make an impact too. Although another thing that I think would make an impact is if this guy stopped.
We're able to tamp down what could have been a much worse situation in the silver.
So, there is that factor as well, but excuse me for interrupting, Rick. Let us continue.
TIA, CREF, the biggest institutional investors in the world, when they begin to return to precious metals markets, as they had to do as responsible investors in the latter part of the 70s, I think then you see the real silver squeeze.
Okay, all right, certainly that sounds exciting. Let's now move over to uranium, which is another market of a lot of interest.
Yes, I think it is indeed going to be very exciting. And I'll make a little note here now that we're in 2022 and I'm getting ready to organize all the people who have written in volunteering, asking how they can help. Maybe we can make a list of a lot of these pension funds and phrase it in just the way they need to hear it, with the proper evidence supporting it. Maybe the clip of something like this with Rick. So just imagine the things out there you're doing, they're working. So what what if TIAA CREF knew about Rosti? Go imagine. Or if TIAA CREF was reading Rafi Farber's The Endgame Investor. That's Rafi Farber of the weekly Endgame Investor Silver Report on the Arcadia Silver Network, which will be coming your way tomorrow. In fact, Rafi just sent me the link for that, and be looking forward to digging in after we finish up here. But he was also writing about the silver market and similar sentiments to Rick, because Rafi says the silver dam should break today. Did some very basic math. And what stands out here as problematic and unstable, well, I'll tell you exactly. From its founding until the silver top in 2011, the total silver in the fund went from 600 tons to 11,000 tons. Fair enough, the price spiked, so that's expected. But while the price was getting clobbered from May 2011 to March 2020, almost 9-year thorough beat him over the nuts with a shovel bear market, silver collapsed from $50 to $11, and yet the amount of silver in the ETF stayed basically stable, which is another thing that one can only hope Rosti will address in his silver investigation, which he started last February 1st. So we're less than a month away from the anniversary of that. I'm planning some special coverage of that myself. I think it might be historic, like Rafi points out here, because all this means that interest and exposure to the silver price increased strongly as the price fell. Otherwise, physical in the fund would have fallen, once again defying the known laws of supply and demand that ceased to exist ever since the Hunt brothers actually wanted their physical silver rather than paper contracts in the 1980s. So anyway, from May 11, 2011, right, that stayed stable. And then the slingshot from 11 to 27, and physical silver in the fund skyrocketed once again from 11,000 to 18,000. Silver squeeze hits $30, and we hit nearly 21,000 tons in SLV. And SLV explicitly warns of a lack of silver that could blow out the fund because of the silverback gorillas unvetted. And Rosti told us how scared he was. So now we have that. Rafi also points out back July 2020, which I've started reviewing again. It's interesting. Certainly last year, a busy year. I'm gonna learn like a little rest in space, hopefully this year, but so many things happening so quickly, and also fleeing my home country and searching for internet in Mexico and all sorts of other things. So it's started reviewing some of these things that happen at a more relaxed pace. Really going back the last 2 years, because a lot of interesting events. Here, Rafi shows how you had that divot. This is the eligible stock to meet the deliveries. JP Morgan had to eat out of their cookie, and you see that drop. What the hell is all that silver doing there, and who the hell does it belong for? He tracked down some group called EGI, and it says 103 million of that pile belongs to SLV. And you can see the details here, or you can pause that if you would like to read the rest. Of course, if you get the Endgame Investor, you can read the whole column every day. and this is the kind of stuff he often comments on, because we really have, I was thinking about it. If you look back at the chart, and I'll be digging into this more on another night, but you had that July delivery, and then shortly after that is when silver went up to $29. Then you have, a couple of months later, check this out. That's when JP Morgan gets arrested. A couple more other guys turn in like September 18th, September 20th. They get fined September 29th, but that's also when the repos started, which the Fed would never explain why. And now there is an article on Wall Street on Parade that I have yet to more fully review, but basically suggesting, and they're usually quite good with their data and evidence in support of that, that it was a bailout for JP Morgan, which would have made sense following the move in silver up to 29. Well, could have made sense. Again, at least last time I checked or heard from Ted Butler's columns, I guess they were flat, but who knows what else they have going on in there. But anyway, these things were happening in sequence. Then you have what ever happened last February in 2021. And now it's just more clues are emerging. And fortunately, in between moving around in Mexico, I've been organizing my legal file more. We do have that legal link, but there's a whole bunch of other stuff like this that I'm sure I'll continue adding to with, I guess, the end goal. I'm not sure, at least having a good evidence file that everyone can give their lawyer. I think there's interest to do some sort of legal suits. Certainly a lot of targets. I mean, there's Ross and CFTC, JP Morgan, Goldman Sachs, BlackRock, the CNBC, certainly, although there's a degree to which I'm balancing not wanting to be a lawyer for the rest of life, but at least present this stuff so that it's there in a way that people can use it, that the mining companies can use it. I know the legal code in the US these days is a little murky, but just a quick update on something that has been happening behind the scenes. I got an email from someone who said that they wanted to support what we were doing a bit more, but we're waiting to see progress. And fortunately, a lot of progress has been made. Getting it all organized and tidy. And that's one of the things I'm looking forward to having some of the volunteers help with. So a lot going on behind the scenes that will help bring all this context, all this information into context more easily. We're also making a one-sheeter so that if somebody has no idea what was going on, for example, like a TIA CREF or some of these pension funds that, I was thinking last year, how that conversation would go where, a couple months from now, you'll hear them saying, hey, Bob, what's this? It's up 10%. What's that sliver? What the fuck is no silver? Oh, what's that? Well, the joke also works with GLOD instead of gold. But I mean, imagine, at least that's my 20 years of financial experience, including a decade on Wall Street, where they just pile on after everybody else does. In fact, one of the books I was reading recently was talking about, it was actually Peter Lynch, One Up on Wall Street, was mentioning how certain stocks, at least if they're the bellwether name brand stocks, the fund manager can buy that. If it gets clobbered, well, he doesn't get blamed as long as every other fund manager purchased it. And it's actually how these funds are investing people's retirement money. But anyway, so there you go. Now on to other things. Quick look at the COT chart, where this one puts it a little more easily than the other one I show sometimes. You see this blue. So the short position is getting closer to zero. Around, let's see, this was back in October, and then they blew it out again. Here's around Basel III, so it came in and I won't read too much further into that one tonight, but just an update of what it looks like on the lower side right now, and see how that progresses. Another note here from Rafi. Silver stocks, this was from last week, but silver stocks have broken below the 90 million ounce mark for the first time. So that was that big dip down. You don't quite see it on that chart. It's at the very tail end. But again, for the first time since the July 2020 emergency, when JP Morgan moved about 50 million ounces overnight in order to meet the record delivery demand that month for 70,000 contracts. So just showing another data point. Some of these I'm not quite sure what to think, but just interesting things happening. And then moving on, in other parts of the world, just adding to the great investing environment in the Let's Go Brandon era. I mentioned this the other day because China Evergrand, their shares were halted on Monday. But then I was reading it again later, and they got building demolition orders. Now here's China Evergrand, and I've never been to China. I know zero about their real estate market, but the Castro property developer said it had been ordered to demolish 39 under construction residential buildings on the resort island, struggling to pay more than $300 billion in liabilities. And they decided to demolish some of the ones that were in progress, which I guess isn't funny. It's just like a little confusing. Maybe I'm giggling because it reminds me of the Hoover era. Actually, I don't have too many favorite U.S. presidents. I'm not really into the emperor thing as a concept in general, but I liked Coolidge a little bit because he, at least in this Murray Rothbard book I read about 10 years ago, he even made fun of Hoover and some of I think it was, hoping I'm getting all these right, but I believe it was Hoover who was saying, well, we're in a depression, so why don't we have farmers just burn a third of their crops to keep the prices higher while people starve to death, similar to Obamonomics. And I would, I'm just guessing here, but if you told me that's what's going on to try and keep prices propped up, they're saying to just blow these down. Sadly, that's how government economics work. I think it's the biggest fraud in history, and now it's almost sinking in more and more by the day. I guess that's the challenge, though. Somewhere it's important to recognize it, and then stay able to take the positive approach and figure out some way to use that to our advantage. And anyway, hopefully get a nice house once the silver market finally moves up. In other news, further establishing the confidence of the stability of the U.S. markets, former FDIC chair resigns after warning Democrats launching hostile takeover of the FDIC. FDIC Chairman Jelena Williams announced her resignation Friday, just weeks after she warned of a hostile takeover of the agency by Democrats. I know there are some people who like either sides of their political parties, so we won't go too much deeper into that, but just doesn't sound good when we have CFTC commissioners resigning, Rosti going into witness protection, and now Jelena. I said Jelena. Here I am in Mexico. It's still learning the J sound. They giggled at me when I thought ice was yellow. Like, what the fuck is he talking about? Yellow. So I'm learning. Although, about those people who giggled at me on that one, they would love to know this little ditty about Prudential mutual fund launching a new silver ETF. And on one hand, you might think, all right, well, that's good news. More interest in silver. Prudential's getting on board. Actually, really what Rick was describing. And here, just a couple tabs later, you see that now Prudential's getting on there. Although before you're thinking, should I just go and throw all my physical into the water and load up on the Prudential ETF? Or is this baby possibly in the same toxic swamp land area galaxy as SLV? Let's dig in a little bit. First of all, the scheme. will reopen. I love at least they're using appropriate language because they refer to it, who can invest in the scheme, and scheme it is, because as per the investment details, the fund shall be put in securities as listed below. Silver and silver related instruments. I hope that, it's that Comex futures, Jeff Curry bonds. I mean, SLV, SIVR, Enron shares, but it could be because essentially if Enron shares have about the same credit quality as US Treasuries. And here you can see in a silver trust, they can invest in debt obligations of domestic government agencies and statutory bodies, which may or may not even carry a central state government guarantee. So, I mean, these are they're going to buy government paper. Could you buy like the Fannie Mae stuff that you're going to back it? So at least, you know, when it blows up, they're going to print more money. So everything will be worth even less, but at least they would get some pennies on the dollar, but instead you'll get corporate debt, money market instruments that have a high probability of failing, and commercial paper. At the same time, Gary Gensler is warning about precautions for a dash on the dollar. So I'm personally not going to endorse this one. I'll steer clear of the NFO for the icky Prudential silver ETF. I've had enough fun just watching Comex futures, which another roller coaster day on the market. Now look at these last 3 days, almost straddling that 23 strike. Now, if anybody wants to bet some silver, whether I actually went through the JP Morgan deferred prosecution agreement today, which it's funny now that they got fined evading regulators by using WhatsApp about a week or two ago, that was another violation of their deferred prosecution agreement, which we will have more on in, that'll be in the evidence file as well for your lawyers. They'll love it. They'll love it. But as I was going through there, I was giggling because it's a big document. Yet they talk about JP Morgan also spoofing and front running barrier options. And a lot of the time why you see that very predictable movement and almost, you know, you can see it in advance how the price is going to react ahead of options expiration. They're actually transcripts of the guys rigging it specifically to do that in the deferred prosecution agreement. So we're not imagining it. It's actually happening. And what I keep being stunned at is here, you know, what's the, okay, so this is the day one, it's the third. Here it's at 23.10 up, then people get stopped out there, some stopped out again, stopped out here, then people, you know, if they have stops in the other direction, all this is happening. The price isn't going anywhere, but they're doing the same thing that I'm reading in the deferred prosecution agreement that they got arrested for. And price ends up in the same place, and you see these divots. Until one day we will see when that is, although to keep yourselves entertained until that comes, fortunately, Andrew Pollard of BlackRock, the kind sponsor. Now this is BlackRock Silver, not that Larry funky stuff, funk, not that shit. This is BlackRock Silver, which actually commenced drilling at its Tonopah North project. Maiden drill campaign on the 100% owned Tonopah North. And that's right next door to Galen, McNamara, and Suma Silver. So a really good region. Total of 9,000 meters of drilling planned in 12 drill holes, multiple high priority silver gold targets identified, district scale potential, lithium potential identified, and a quick note from Andrew as we head into 2022, because they are poised to have a pivotal year for the company as they focus on simultaneous expansion and de-risking of the Tonopah West project, where they continue to search for new discoveries. And fortunately, things have been going pretty well so far. And then it's been nice now getting to know Andrew and just bringing him on and seeing him follow through and talking to the other analysts that I have on the show who dig through these projects as well. And it's almost kind of surreal at times where, you know, all my life I've thought of investing or stock market as like, you know, throwing a dart at a board and guessing which way the thing is going to move. Yet So incredible. I find a sector that I believe in. You find people that you get along with, have the willingness to update their shareholders. They follow through, and at least to me, that makes things a bit easier. Obviously, this is not licensed or legal financial advice. You probably have to call Ross Bedham at the CFTC. If you get through, please email me. He's the one with the licensing. Although he may be preparing his defense right now. I have not heard from him lately, but that's why you can always contact us through arcadiaeconomics.com. And you can contact Andrew or any questions for BlackRock by hitting the contact tab here at blackrocksilver.com. So thank you again, Andrew, and thank you to everybody out there watching, and hope your new year is off to a good start. And that is the silver news. But like you heard, even Rick Rule says it's a matter of when rather than if on the next Silver Squeeze anniversary coming next month. So hit the subscribe button and the notification bell so you can stay posted and miles ahead of Wall Street.